Good morning all, I hope you are well and welcome to another one of my videos. So I have three pairs on watch today. Those are pound Kiwi, Aussie dollar and Euro pound. So a lot of what I was anticipating yesterday has actually manifested because of the bank holiday. Most likely in the UK we had a lot of sideways price action, so I'm going to talk you through these pairs now and what I'm going to be looking for today. So starting off with the best of the bunch, in my opinion, pound Kiwi. Why am I looking at this pair? Well, if you were paying attention to yesterday's video, if you watched that one, you will know why I'm looking at this pair. But repetition is the name of the game in any endeavor in life when it comes to becoming successful. So it's about repeating the same things and getting good at the basics and just rinsing and repeating, basically. So pound Kiwi, why are we looking at this one? We have this liquidity point. I'm not really concerned about this wick, and one of the ways to determine whether a wick is actually part of the market structure or not is simply to switch to the line chart. You can see if we switch to the line chart, that volatility wick does not appear. So that gives me a clue that this is the area of value. The next question I ask myself is, how did we reach this area of value? We reached it by way of a 1, 2, 3 and a very, very non-progressive. This is non-progressive price action. Okay, so when we've taken this long to reach an area of value such as this, and we do so by way of this huge structure, that gives me a clue that this is an area of value. And you might be thinking that we could be selling at, and you might be thinking, but it's blasted to the upside. Well, as I touched on in yesterday's video, what we typically see at these, not so much at the lower time frame little inflection points, but certainly at these standout liquidity points, we often see price break structure before crashing to the downside. And one of the reasons is because of FOMO. Okay, people see price going up, they believe what was previously resistance becomes support once it's broken above. The brokers help out with this theory by putting messages out in their little ticker feeds on their platforms saying pound Kiwi at 3-year high, for example, and then that encourages FOMO and that encourages people to start buying. Okay, one of the ways what we typically see when this occurs is we see these non-progressive structures leading up to a liquidity point. And what we also see is these 1, 2, 3 structures a lot of the time don't actually quite meet with the liquidity point. Okay, and then what often happens is we go into an ending structure, so we get a move up and then we get a structure at the end of it. So when we see a 1, 2, 3 at the end of a 1, 2, 3, which doesn't quite line up with this, a lot of people that even did have their trend lines plotted as I have here, they see price break out of it. That confuses them because they think it's going to the upside, and then of course it breaks above here, and then people think that this is now support, so they start buying. And one of the ways that we can identify who is actually doing this, whether it's retail or whether it's the big players, is if you look at when we broke above this liquidity point, we get some momentum there. And then we get these, you see the momentum. Look at the candles, they're getting smaller and smaller. A big bodied candle, slightly smaller bodied candle, slightly smaller bodied candle. This alone gives me a clue that this is like, and then we get these indecision. We get this low test followed by a high test, indecision candles. This gives me a clue that this is people being caught the wrong side of the market before the crash down. And that's exactly what we've got, okay? So we see these things over and over again. I'm just going to wait for the page to unfreeze itself. And that's one of the things. This is a prime example, being patient, waiting for something to happen. A lot of these traders, it's not that they're terrible traders, it's just that they're not patient enough. Okay, so when they see something go without them, there's more facets to it than that, but FOMO is certainly a big one. If a page doesn't load, you have to wait, like with anything in life. So the next thing I'm looking at is the sequence. Okay, so we have the impulse down followed by the tight corrections, which are typically the bigger players, the banks and so forth, stacking their orders before the next move down. So if we just analyze this on the 15-minute chart, impulse down, tight correction, impulse down, another tight correction into a slightly larger one, into a slightly tighter one. That's more visible on the 5-minute chart, but tighter one into a larger one. So the sequence is very, very nice. And if you remember from yesterday's video, I said that I was looking for a risk entry up here because we have that we have a liquidity point. There's nothing else above to worry about it. There will likely be what we're kind of retesting the back of this as well. So if price comes up to this is a prime example of non-progressive price action. Look, this is not typically the kind of price action we see, although it can happen if we were just going to suddenly reach this area and then blast to the upside, particularly after a nice sequence of corrections such as the ones I just pointed out. Okay, so when we reach there by way of a 1, 2, 3 move, we reach a liquidity point. There's nothing else sat above it, no inflection point sat above it, and we're kind of retesting the back end of the previous structure. That gives me a clue that when we tap into it, and likely tap just above it, as I said in yesterday's video, that we'll likely push down from there, and that's exactly what happened. I didn't manage to get a trade on this because I was actually asleep. So my rules here would have been, if I just touch on it, so I would have waited for a 4-hour. This is a 4-hour structure because I can see the structure of it on the 4-hour chart. I can't see it on the daily, but I can see it on the 4-hour. So therefore, this is a 4-hour structure. So what I would have done is I would have waited for this 4-hour candle to close, and that would have unlocked the 1-hour chart. Okay, so this candle here would have given me permission to drop down to the 1-hour chart to look for entries. That candle, if you just look at the bottom of the screen, that's the 10 o'clock candle, 10 o'clock last night. That would have closed at 2 a.m. So at 2 a.m., I would have dropped down to the 1-hour chart, and I would have waited for the next 1-hour candle to close. So the next 1-hour candle was this one here. So we reached here at 2 o'clock. So I wouldn't have got short here. That 4-hour candle would have already closed. I would have got short just after this one. I would have had my stop loss just above. This one closed at 3 a.m. But as I said, I was asleep, and then we pushed down from there. So, but I didn't manage to catch that entry. That doesn't bother me in the slightest. A lot of people would have jumped in, got in at the wrong price, and then had a very wide stop loss. It's the sort of thing people do. What I'm going to be doing now, so I see that move and I think, okay, well, I didn't manage to get that was because I was asleep. What's the next best option? Is there an option? Just because prices move down, sometimes there isn't an option. But in this instance, what I'll be looking for today, with all things considered, is I will be looking for price to correct sideways, and then I will be looking for a risk entry within the flag, not a reduced risk entry on the break. And that is because if we just sized, if we got a correction such as this, and let's say I got short there, I'm kind of trading into this trend line, okay, which means that it would be difficult to manage the trade. So if we got something like this, price pop down into that trend line, it's important to remember, if we zoom out, that this trend line, although I don't think it holds much weight, it is visible on the 4-hour chart. Okay, so the more time frames that something is visible on, the more weight it holds. But generally speaking, once we've broken the highs and tapped into the liquidity, and tapped all the stop losses, limit orders, etc., generally speaking, if we are going to react from somewhere, it will be the bottom of the structure. But we are risk managers first and foremost. So with that in mind, if I just tap this back to, that's it, how it was. What I'm going to be doing, just to make sure that I'm better protected, is I will be waiting for the risk entry within the flag. So if I just drill down to the 15-minute, what I've done here is I've set an alert just below where price is to see if we push down and get that second bottom. And if we get the second bottom, then I will set another alert up in this area, depending on how it forms, to see if we can break the high of the flag. If we break the high of the flag, then I will be looking for that rejection candle, and then I'll be able to manage it just in case price reacted from this trend line. Okay, so I'd have my stop loss just above, and if we reacted from that area, then depending on how it formed, I would be able to manage the trade. So, before we reach the trend line, or if we reach the trend line, I'd be running at something in the region of 2.5%. Okay, so if we pop back up and formed, say, something larger like that, I'm not anticipating this, but if we form something larger, or we scooped back up, sometimes price will scoop back up to give us a double top. We didn't break this by much. It's not unthinkable that we get a tight flag, I get tagged in, tagged out, price pushes up for a double top, and then we go from there. That can happen. So just to mitigate against that, I'll be looking for that risk entry within the flag, and we will see whether that shapes up or not. It might just dump, it might just sell off. That's absolutely fine, not bothered. The next pair that I'll be looking at, so I'm just going to leave that on the chart, is Aussie dollar. Why am I looking at Aussie dollar? I'm looking at Aussie dollar because on the higher time frames we have this, we tap into this area here. We do so once again. Look how we got there. We got there by way of a very, very intentional 1, 2, 3 move, giving me a clue that this 1, 2, 3 move is ended when it lines up with an area value such as that. We push down. This is me pattern separating again on the lower time frames. We push down. We form this larger correction. Then we go into this 1, 2, 3 move. We tap the liquidity, and then we get, this is from here all the way down. If you just look at this all the way down, this is not the greatest sequence. Okay, this is not the greatest sequence. We've gone from a larger correction into an even larger correction and then pushed down. This has an element of if we just touch on it, where's the paintbrush tool, right? This does have an element of a kind of middle section to push back up and potentially break this high. However, the bit when we look at this price action here, the bigger players have kind of showed their hand. Okay, you'll see this more clearly on the lower time frames. We've had a very nice sequence of corrections here, and crucially, we've corrected below this low for over a week now. What's the date? 29th. For over a week, we've corrected below the low, and why that's significant is because if there was a lot of, this is a sharp move down followed by a sharp move up, which could imply that there's a lot of liquidity under here. However, if there is a lot of liquidity and sat down here, we don't typically, we typically just tap into it, or you get people caught the wrong side of the market. But if we were getting people caught the wrong side of the market, we would typically see the kind of structures that I showed you on pound Kiwi. So when we just impulse down, break the low, and then correct sideways, that's a good indication that there's not enough liquidity sat here. Of course, price can build liquidity, but that's a different story altogether. But this gives me a clue that there's not enough liquidity under here to send this to the upside, and that this is just an impulse correction continuation to push lower to actually take out this low here. And one of the clues is that if we just measure the previous impulse from top to bottom, typically speaking, when we get a correction afterwards, the impulse out is of a similar length, and we typically measure these from the top of the structure and from the break. And if we measured it from the break, that would coincidentally line up with this liquidity point as well, okay, where we could then potentially be looking for longs, or looking for longs in that area. So with that in mind, if we just now drill down to the lower time frames, you can see that I've pattern separated here. This is a slightly larger correction than we would anticipate seeing for continuation to the downside, but sometimes that happens. But you can see the subsequent corrections. It's a very, very nice sequence. Not so much this one, but then we get the impulse down tight correction into a larger correction. There's actually another tight correction there, into a slightly larger one, into a tighter one, into a larger one, into a tighter one, into a larger one, into a tighter one, into a larger one. Okay, so you've got a very nice sequence of corrections there, and the more that happens, typically speaking, the more reliable the sequence on the way down, the more likely the next correction is to be reliable as well. So I'm going to just take the path tool off. What I'll be looking for today is the following. So you can see this is a prime example of how we trade. Those of us who trade the Falcon strategy, we have a 1, 2, we near miss, we get close to this sharp hook point where there's likely a lot of orders, but we don't quite tag it, and then price starts to move down with a bit of impulsivity, but then we kind of correct, giving me a clue that this is people trying to sell it, whilst there's still orders up here which are dragging the mid price back up. Okay, there's still orders in this area, so a lot of the time, if there's a lot of liquidity above market price won't dump to the downside until it's collected those orders. So with that in mind, what I'll be looking for today is the following. Because this is a very large structure now, I won't be looking for a risk entry from the top, especially when we have a structure sat just above it, when we have a liquidity point, not so much this wick, but we have this structure sat just above it, when this much volume has been built, we have a structure, a liquidity area sat just above it, it's more likely that price will break out and then break back in. So taking a risk entry in this area would be more risky. So for that reason, I'll be waiting for a push up to this area. This may not happen by the end of the day, but if it does, push up in that area followed by push down, then I'll be looking for the flag, and I will look to get short either within or on the break of the flag. And as you can see, I would easily be able to manage this down to these lows, down to this trend line. So that is Aussie dollar just speeding up ever so slightly because I'm fast running out of time. If you remember yesterday, I said that I was looking at this, not so concerned about this. We do have this kind of 1, 2, 3, which taps into a sharp point there. And we kind of, if you look at this, this wick kind of near misses this area ever so slightly. But I'm not too concerned with this. Euro pound is not always the cleanest to read, but we do have some clean price action here. Jesus Christ. Excuse my French. Right, I'm just going to turn the volume down on this. That's an alert going off from pound Kiwi. So we tap into this area by way of a 1, 2, 3 touch move. We push up. You can see we've had some impulsive momentum, and this is very impulsive, particularly for a pair such as euro pound. Okay, so we have the 1, 2, 3 move into an area of liquidity, and there we go. We can see that, and now you can see. So the next thing I'm looking at is the sequences, and we have a tiny little correction in there. I think that's excuse me. I think that's visible on the 5-minute. We go into this slightly larger tight correction. You've got to remember that euro pound does tend to correct for longer. Tightish, larger 1 hour structure into a tight correction, and then we're into a larger correction. Okay, so the sequence is quite nice. I said in yesterday's video that, even if we got something here, I wasn't fooled by this because it was a bank holiday. Okay, it's a bank holiday in the London session, and this is euro pound. Okay, this is typically traded during the London session, so I wasn't fooled by this correction here because I thought if this did commit, it would likely just pop back down anyway. So with that in mind, with this sharp move down followed by a sharp move up, so what I'll be looking for today, and again, this may not be ready by the end of the day, but I will be looking for a push down into this area, followed by a push back up. Looking at the nature of this, and given that if we reach this area, we would kind of be trading behind underneath these lows, and we've kind of got this correction sat just underneath it. I wouldn't be looking for a risk entry here, so I'll be looking for price to tap into this area, impulse back up and flag, and if we get that, then I'll be looking to get long on the flag, and as you can see, I'll be able to manage that trade if we reacted from this area. So that is all I'm going to be looking for today. That alert would have been pound Kiwi. There we go. So pound Kiwi, this may sell off, but if you look at the gradient of this, is quite a sharp move up. So I wouldn't be surprised if this comes back up. So now, in keeping with what I just said, if we just look at this on the on the 5-minute chart, it's quite a sharp move up. So I'm going to put an alert in this area, and of course, if this just tanks, then I'm not bothered in the slightest. This doesn't surprise me because, as I said, we had a bank holiday yesterday. If this corrects sideways and forms a 1, 2, 3 like that, then even better. I would prefer that actually, but if it just sells off, it sells off. It doesn't surprise me that we're getting some momentum coming in because obviously there was no, there was a bank holiday in the UK yesterday, so typically speaking, we can have a little bit more liquidity come in when the market reconvenes. But that is all I'm going to be looking for today, folks. I hope you've enjoyed this video, and I will be back tomorrow, providing I have something on watch with another video. Thanks for watching.